Have you ever wondered how top traders know which direction the market is going to move? Do you want to learn to predict the market movements too? The good news is this skill isn't something you're born with. It's something you have to learn. So if you watch until the end of this video, we will show you exactly how to predict the market movements. And as a bonus, I will have you unleash the power of support and resistance zone so you can trade like a top trader. Hi, I'm Tom Leung with Stock Navigator, and we have a special guest today, Mr. Cleve. He's one of my top students at the Stock Navigator community.
Hi, Tom. Hey, YouTube family, and welcome. Today, we are going to be diving into a foundational piece of technical analysis that can really make or break your trading strategy. This is known as support and resistance. We've all heard about it before, but today we will be peeling back the layers, Tom and I, and exactly what it is in the first place. We're also going to review on why it is so important and then also how to use it for yourself. And as a bonus, as he mentioned, if you stick around to the end of this video, we will even show you how we utilize this in trading on last Friday's markets. But first, please go ahead and hit that thumbs up and subscribe below if you want to stay up to date with all the latest trading topics that we review with us. So Tom, I know that we use support and resistance in our trading every day in and day out. Can you share with us and the audience, in your own words, what support and resistance is, and then why it's a concept that's so important to get right?
Sure, I will. As you know that in trading, support and resistance refer to the level in the market where the price tends to either stop or reverse direction. Understanding support and resistance level is essential for traders as it helps them make informed decisions about where to enter or exit the trade. Support is the price level at which the buyer pressure is strong enough to prevent the price from falling further. It acts as a floor below which the price is unlikely to fall. Resistance, on the other hand, is the price level at which the selling pressure is strong enough to prevent the price from rising further. It acts at a ceiling above which the price is unlikely to rise. Identify support and resistance level on the chart can help traders predict where the price may turn around or consolidate. In turn, it can help them make better trading decisions. For example, if the price of the stock is approaching a strong resistance level, a trader may decide to sell their position or take a short position, betting that the price will not break through the resistance level. Similarly, if the price of the stock is approaching a strong support level, a trader may decide to buy the stock or take a long position, betting that the price will bounce off the support level and rise up. Therefore, a trader needs to use the technical analysis tool to draw support and resistance level accurately. Additionally, it's important to keep in mind that support and resistance level are not fixed and it can change over time as the market conditions change. So it is essential to constantly monitor the market and adjust the trading strategy accordingly.
Wow, Tom, that makes perfect sense. And it also explains why we can see these levels day in, day out, as they act like magnets just over and over. But the thing is this, Tom, and we could talk about it, but can you show me and the audience this on the chart? Could you go ahead and give us a demonstration on how to identify it and draw those key levels?
Definitely, I can show to you right now. All right, as you can see, Cleve, this is a chart of the EBD SB 500. So if you look at the chart here, you see that the market has been bouncing back and forward. Okay, so they start the uptrend and then they put back to the downtrend, and then you can see the chart in front of you right now. We try to demonstrate to you. This we call a sushi chart. This is the proprietary chart that we're using in Stock Navigator. And you can see that the chart, they come with a multiple color. They can tell you the transition between the bear and the bull. So when the market, the green color means that they are in the bull mode. And then after that, they transition from the bull to the bear, and then from the bear back to the bull, and then they keep doing that. So the chart will help you to identify where the market is heading to. But as you look at the chart carefully here, you can see that the chart, they have multiple levels, because remember, the market, it never goes straight up, it never goes straight down. Or most of the time the market go up and then they go sideways, and then they go up, or they go up and then they go down, they go sideways, and they go down further. So that's why if you look at the chart in front of you right now, you see that we have multiple level of support and resistance, and the buy zone and sell zone. So to demonstrate, I'm using a 60-minute chart of the E-mini SP 500. As you can see that I lay out the multiple level of the buy zone and sell zone. So before the market open, I be able to draw those sell zone, buy zone, based on the historical data, on look at to the pivot where the market is heading to, where the seller, they reject and the price cannot go higher, so they make up a sell zone, and then they come back down at where the buyer, they get back in before, and you can see that they will push it back up to the sell zone again. So the market will continue to doing that. So as a trader, it's crucial for you to be able to identify the buy zone, sell zone ahead of time before the market open, so that you can see here, because this is a 60-minute chart, so every candle they represent for 60 minutes. On Friday and Thursday, you see the market is coming down, and then they go sideways, and Friday they go nowhere. But when the market go nowhere, doesn't matter, that doesn't mean that you cannot trade. You still be able to trade, but you have to know where a direction they are heading to. So you can see that the market it hit the top here on the April 18 in the morning, and then they come back down, and they come back, they shoot it back up, they couldn't go higher, they reject here, so they create a sell zone there. So the market come back down, and they hit to the buy zone, and they put it back up, they hit to the sell zone, and they put it back down to the buy zone. So the market keep bouncing around sideways, choppy mode, as you can see on Thursday and Friday of April 20 and April 21st, right? So that's why we have to identify those levels first, start for the bigger time frame before we can nail down to the smaller time frame.
I see it right there, and I remember trading it last week as well. And Tom, that was a great demonstration. Once again, you always make it just look so easy. And this is a beautiful concept that we use to make money inside of the markets day in, day out. Bull market, bear market, we just don't care. We're going to make money off of it. Doesn't matter. And we use this method inside of breakout trading, trend trading, and even inside of those reversal pattern trades. I know we can't show everything here in YouTube like we do inside of our community, but Tom, can you show our audience maybe just one example, like where we traded on Friday, on how we identified the zone, maybe how we were using the sushi chart to get out of the zone?
Definitely, I will demonstrate on the SP 500 chart for you.
Now, before we get into the demo, I would like to ask the audience, do you currently like this new format that Tom and I are using to teach these concepts and educations? Leave us a comment below. We'd love to know what you think.
All right, as you can see that this is the chart that I'm going to show you. This is the 1-minute chart. After you identify the buy zone, sell zone, the key level on the 60-minute chart, and this is the 1-minute chart on the SP 500. This is where we use the chart to microscope the entry, so we can get early entry and then early exit. If you look at this chart here, so before the market opened April 21st, 2023, so overnight the market had come back down, and after they hit to the buy zone on the 60-minute chart, the market had bowed back up to the upside. As you can see here, at the sushi chart, they turn the corner, they lead you to the upside. When they hit to the sell zone and the people taking profit, a lot of people, they wake up early, and then when they think the market will continue to go higher, but they didn't know that this is the sell zone on the 60-minute chart. So they jump in when the market open, they jump in, they think the market go higher, they buy it, and then when the institution, they put it back down, as you can see here. So when the bell ring, so the market, it instead of go up, because it hit the sell zone, they pull back down, so make a bear flag, and then they continue to go down. So they go down to where? So you can see that the sushi chart, they turn red, they lead you to the downside. So they go down right into the buy zone, and then the buyer step back in and put it back up again one more time to where? To a sell zone. and then people start selling again.
Yeah, just like we talk about in the room. What happens in a sell zone? A lot of times sellers will sell. And you could see right there, the price got right back to the sell zone. You see a nice bearish formation. Sushi starts to get bullish exhausted, and it turned right around. And once you see that clue, Tom was already calling it inside of our live stream in the community. He said, watch out for the buy zone. And so being able to see that early is just being able to take profits when they're given. And as you can see right there at about 7:45, 8 o'clock Pacific time, price got right back into the buy zone. It had absolutely no traffic getting there, straight from the sell zone to the buy zone. And then you see the traffic, and that gives you the clue. Like we mentioned earlier in the video, this is where you want to be on watch. This is where you're looking for the clue. And after it makes that first higher low, what do you think, Tom? What did you see for the rest of the day? How did you guide the rest of us in the rest of that chop?
Yeah, after they chop, they hit here. That's why it's very important. A lot of people, they misunderstand the support and the resistance. So the people think that, okay, when let's see the low, when the market break this low, they try to short the market, but they didn't know that this is the buy zone. So the market turn around, and then after turn around, they give you a bullet formation and push it back up. So you see that the market continue to push it back up, and then it goes sideways. They try one more time. So this is the previous sell zone on the 60-minute chart, but in the 1-minute chart we have another sell zone here. When this one fails to make a high, so they create a strong sell zone here, as you can see. So the market will come back, they hit here, and people will sell. They will back down again. But this time here, because this one here, the market, the buyer step back in here, so they create another buy zone here. Okay, so that you can see. So the market, it just come right back to the buy zone and retested one more time. They couldn't punch through it lower, so the buyer step back in. They break out with the bullet formation again, and then push it back up to where? To a sell zone. This one here is very sell zone, it's multiple sell zone, and you can look to the left. That's why the market cannot go higher. They put it back down, and then the buyer step back in, try to put it back up. Okay, so now they create a strong resistance level here, and you can see that the market continues to go sideways, choppy between 41.46 to 41.53. So as a trader, you have to know where you are at, and the market cannot go straight down or straight up or straight down all the time. At some moment, they will go sideways, choppy. That's why you have to control yourself. You know that when they cannot pass the resistance, the market will continue to go lower, but they cannot go lower because the support right here, so they hold up, and then multiple a support and resistance zone here, they will hold them up until the moment at about 10:30 or so, the market be able to put it back up one more time. And this time, after they reset the resistance many times, the price, the sushi chart turn green, they be able to punch through it with a strong force, and then they pull back down. So you see this level used to be a resistance, now become a support, and the market push it up straight to a sell zone to retest one more time until 11:13 or so. And then you can see that when the market put it back up, when they break out this level of support, you see the market, it change color and then turn to the downside, and people short it down to the bottom. But this one here, it used to be a strong buy zone, as you can see here. So the institution, they will hold on to this level very strong. So the market, it tried to put it back down. The bear tried to take over, couldn't do it. So they break out the downtrend line, and market pull back down, and continue to put it one more stop to the end of the day. They hit right into a sell zone again. So the market ran out of time and could do, and then they stop right there. So that's why look at the chart, understand the level of support and resistance, understand the level of buy zone and sell zone. You'll be able to take too many a lot of trade in the upside, downside, and you can successful accomplish a day trading formula that we did at the Stock Navigator.
Wow, family, that demonstration got me fired up. I hope you're fired up too. Just to recap and in conclusion, here are some key takeaways that we can take away from this video on mastering support and resistance. Number one,
identify the key level. Always looking for the significant level that show on a multiple time frame analysis. Always start with a bigger time frame and scale down to a smaller time frame. And number two,
then you want to confirm and watch how price reacts. You want to pay close attention to how price behaves, and then you look for those clues on where to take that price action. And then number three,
practice proper risk management. Never trade without a stop loss, and make sure it's at a meaningful area that aligns with your risk reward profile and looking for the profit when they are given. And number four,
and then you want to continue to learn and adapt. Remember, family, the markets, they cycle through their own evolutions and cycles. So as traders and as successful traders, we must evolve with them. Now, YouTube family, we hope you found this video educational and that it helps you align and get towards your trading goals. If you would like to learn more and accelerate your path into winning on purpose, please click the link in our bio and see what we're all about. We really also would appreciate your feedback as well. Right, Tom?
Of course, please subscribe and comment below so we know what you want to learn next. And remember, the markets will rise and the markets will fall, but here at Stock Navigator, we win through it all.